First, let's focus on back-to-school shopping. That's what's coming up next. That's the next big retail event. If you listen to MasterCard's estimates, retail back-to-school shopping is going to be 5.5% higher year over year. Department stores up 25%. The real question is, how long can this retail rally really last? What do you see as the tailwinds and the headwinds?
Well, back to school is going to be a boom. There's no doubt about that. And it's not just going to be apparel, accessories, and shoes. It's still going to be in the traditional things from last year, which we saw a big bump in electronics and things like that. That's going to continue, despite the fact that we bought a heck of a lot of that stuff last year. And so it's going to run right through back to school. And then we're going to head into holiday. And holiday is really going to be good for discretionary retail. It's going to be very strong with apparel and accessories and shoes and cosmetics and jewelry and all the stuff that goes with it, because the consumer is very, very healthy and they want to spend. And so far, they're all dressed up with no place to go. They're just starting to book vacations. So they're spending a lot of money on themselves.
Fair enough. One of the big things we talked about in retail, at least recently, are supply chain issues. Just took a look. Trucking rates just hit a fresh record high in July. No sign of those going back down. Obviously, we're seeing wage inflation. Containers are very expensive right now, at least. I know a lot more are being manufactured as we speak, probably because of all the demand. Do you see supply chain issues, wage inflation continuing to weigh on margins, or can retailers work around those?
I'm not too worried about the ocean shipping component of that. I think we're going to improve the container situation. We're going to have more boats coming out of mothballs. I believe that is going to start to ameliorate around back to school and into holiday. I don't think the problem, though, with domestic labor is going away. No retailer that I talk to right now can hire as many people as they want to hire, and they have to hire a lot for holiday. And we've got all the issues with domestic trucking. We just don't have enough drivers, and that's going to be expensive, too, to solve that problem. So is that a negative to gross margins, just like the supply chain issues have been a negative to gross margins so far? Yes, they're negatives. But we're very thin on inventory. I'm telling you, if you want it for Christmas and you see it, you better buy it now, because it'll be gone when you go to buy it and it won't get cheaper. What does that mean? That means really good gross margins for the retailers heading into back to school and right through holiday. That's going to offset anything we see in the supply chain and anything we see with domestic labor problems. However, we have to solve those, because you can't sell the product without people to sell the product. We can't move the technology fast enough to solve those, at least in the short term. But I foresee sales being really good right through first half of 2022, at least.
Well, I'm going to push you a little further on beyond that, because, you know, Frank mentioned that the retail ETF, the XRT, was up 50% this year. But if you go back to last year at this time, it was trading around 45. Now it's at 96. So it's more than doubled in the last year. I guess you could argue that it's something of a relief rally as retail came out of its COVID coma. But for how long? I mean, you see this all the time. When there are natural disasters, there's reconstruction boom that lasts for a period of time, and then it levels off again. When do you see retail leveling off from this relief rally, if you will?
Well, I think we'll see a transition, right? We're going to see more and more spending on travel. We're going to see more and more spending on experiences, because they couldn't do those things during COVID. So that's going to start to eat into what we're seeing in the more traditional type of retail spend. And we're going to see discretionary apparel, shoes, accessories take some away from what has been the home and garden and all of that stuff. So we're going to see some movements in the way it works. But the consumer is really healthy. And the consumer's looking at unemployment below 6%. So far, unemployment compensation has been very, very strong. There looks like there'll be plenty of jobs. Anybody that wants a job right now in a warehouse or in a grocery store or a retail store can probably get one. So we're going to see strength there unless something bad happens that none of us foresee right now. So I think the ability to spend is going to continue. After all, savings rates are really high, right? Credit card use is low. That's going to start to eat into the ability to spend. And I think that's going to continue. So I expect the consumer to be strong right through the back half of 22. The question is, will we be able to deliver the product at the price they want to buy it, or will we deliver too much product and start to have to mark down like we have in the past? So I'm a little worried about the back half of 22, because comparisons are going to be harder.
Right.
And we may have people ordering a little more than they've been ordering, because they've been very cautious so far, which is why gross margins are going to be good right through the spring season. Too early to tell yet about next fall. I think the consumer will be strong. I'm not sure about cost structure.
Shepard Smith here. Thanks for watching CNBC on YouTube.